let's pick up on Safaricom, dropping back close enough to 4% in yesterday's session and hitting that 5 shilling mark yet again, hurt by this threat that's being posed to its revenue line moving forward. Do you see this as a mere knee-jerk reaction by the market or something that's actually gotten you pretty worried?
Well, thank you very much, Alishia. That's a good observation, especially because of what has been going forward with Safaricom. They just announced their half-year results, which were very strong. And in addition to that, they also announced this new mobile banking platform, which is fairly very good for the market. And it has also helped in terms of cushioning the share. But definitely, I think their core revenue stream, which is mobile calls, definitely is a bit of a concern because of the anticipation of the mobile termination cap rates, because definitely that will affect their performance. And it seems like they're already positioning themselves to still strengthen their revenues because of being able to diversify, which might sustain their profitability. But in terms of the market, definitely that is a concern, and so it's expected that the market would react to that.
Yeah, of course, you know, while we've got this negativity coming through in terms of the kind of impact this news could have on its revenue line, Samuel, as you say, it's a company that's focusing on diversifying that revenue base, focusing on data, focusing on mobile transfer, focusing on expansion into a territory like Sudan as well. So what are you making of the current valuation? Because this 5 shilling mark has proven to be pretty sticky over the recent past.
Well, looking at it in terms of the valuation, definitely I think that has been a bit of a concern because remember the issue price for Safaricom was actually 5 shillings. So I guess most people have been concerned about the fact that it has not been able to sustain that, and so it has been trading at below that for quite a while. But look at it in terms of the promising aspects of the company, especially two things: their client base, which is very strong, and even their market share, which is also very strong, and also looking at the infrastructure that they already have in place, like the M-Pesa platform, which seems to be very strong. So far, you haven't seen much in terms of the risk aspect of it, and it seems like they're being able to now build and tap onto that to be able to still strengthen their profitability. So I think going forward, the company is still looking very promising. So even in terms of the PE ratio, even in terms of the pricing, I guess the concern for Safaricom has always been the liquidity, because the number of shares in the market seems to be much. But in terms of the promising aspect, the future prospects of the company, that is also what is being factored into the share price, which is already indicating that most investors will be willing to pay the 5 shillings.
So at this mark, Samuel, safe to say that if you can get your hands on stock, you'd be buying at the 5 shilling mark?
Well, I think for now, because of the fact that, just like you mentioned, between January and now it has gone up over 70%, I'll be a bit cautious as a buyer, because I guess of the fact that the share has really jumped in the last 1 month or so. And so right now, I guess for most people who had bought at the much lower prices, it would be prudent for them to consider either taking profit, because the rise most likely was just in anticipation to what has been happening. And definitely once all these things are factored, we should see the share stabilizing. And once the hype, especially the interest in the share, cools down a bit, that would be a very good time to take up the share.
Of course, Samuel, while we've got the telecoms regulator having calls made across networks, and that spelling bad news for a player like Safaricom, a 35% cut does work to the benefit of other players in the market, specifically those who are exposed to the consumers within the Kenyan economy. Who do you see standing as clear benefactors of this ruling?
I think one of the major companies that has actually been pushing for some of these mobile termination rates to be revised has been Airtel, because Airtel, I guess, for a long time has been really struggling to be able to still maintain their profitability, as well as to still be able to remain operational. And also telecom has also been struggling quite a bit. So hopefully, mostly I think Airtel, we should see Airtel now coming strong in terms of the numbers that they're doing, because most of what has been happening is that a lot of their revenues have been actually going to Safaricom because of this interconnectivity calls. But definitely going forward, if at all that can be cut, it will be able to be a boost for them in terms of their revenues.
Of course, if we extrapolate it further, Samuel, beyond the telecom space specifically, I mean, something that stands front of mind for me is a company like Wachiri. It's within the retail space, and of course, with more consumers having more in their pockets to spend, a player that could possibly benefit is a player like Wachiri, isn't it?
Definitely, I think in terms of services that are being offered, especially in the commercial sector, I guess that's the one factor that we should definitely look at, especially for Uchumi, which came back into operation, or at least it was listed recently. Definitely in terms of the disposable income for most of the investors as well as the consumers, definitely that will be another boost for them, because I think for Uchumi it's very well poised, especially in the fact of, in terms of the fact that they are positioning themselves to be able to expand into the region as well as opening new branches. And so in terms of disposable income, especially in terms of the pocket money, definitely those are some of the counters that will be able to still benefit from this.
Very interesting that we had Uchumi, the worst performer on the index yesterday, but investors are still seeming to be keen on it. Of course, some news around it is that the government specifically has shown interest in purchasing more of its shares. In the meantime, let's touch on the financial sector. Samuel, Standard Chartered Bank seeing its new shares beginning trade on the NSE in yesterday's session. Run us through the performance there.
Well, for Standard Chartered, I guess they launched or they introduced the new shares yesterday, and the interesting bit about the share is that it has been very strongly performing, especially in terms of the share price. It has risen to an all-time high, which was already an indicator that there's a lot of goodwill for the stock, and especially in terms of their reason for the rights issue. But I think the concern for most people is the fact that the share is pretty pricey. And because of that, I guess there's a lot of demand and very little supply of the share, which already is indicating that a lot of investors would want to be able to purchase into the stock. And so because of that, most of what people would have expected, a bit of profit taking here and there, is not really even being felt, because the number of shares are already being mopped up. When you're talking about things like the oversubscription of over 158%, which is very strong, is already showing a lot of interest in the stock. And Standard Chartered PLC owns over 70% of the listed shares, which already indicates that the float of the share is very, very, very minimal. And so the talk about a share split is already being a very welcome move in terms of investors being able to at least afford the share for now.
Of course, the telecom space and the financial arena are two sectors, Samuel, that are becoming very intertwined right now. And of course, we were talking about, Safaricom having launched this new mobile banking service called Wachiri. In addition to M-Pesa, how do you see this evolution within the telecom space changing the dynamic within the financial arena specifically?
Well, thank you very much, Alishia. Definitely that's a bit of a concern, especially for most of these upcoming as well as financial institutions. And for M-Pesa, definitely, as well as Wachiri coming up into the market, is already something that's already sending signals to most of these financial institutions. And I guess just like you mentioned there, we should be expecting most of these financials to be able to try and position themselves either to partner with Safaricom to be able to still be able to offer the product, because in terms of things, especially their core business, which is lending, I guess that's something that is definitely under threat right now. And also in terms of their positioning going forward, I guess the challenge now is going to be for them to still be able to maintain their customers. And some of the things that we should be expecting being revised now is things like their interest rates.